Doji candlestick have the same opening and closing price, so its real body appears as a horizontal line. It represents indecision in the market. Let's take a look what's going on when a doji forms. As session started, price was driven up by buyers, but it could have also been sellers driving the price down. Then, sellers pushed the price back to its opening price and even lower just to meet the buyers jumping in the market again and driving up the price to its open once more. This process could have repeated itself over and over till the end of the session where the price closed the same as it opened. As you can see, there is no real conviction about which direction the price should go, and that makes this candlestick signal neutral. I wouldn't advise anyone to make a trade based only on appearance of doji. However, if we see a doji after a strong bullish move and we are at resistance level, it could indicate that bulls have become exhausted and bears are ready to take control. Or the opposite in a downtrend. After a strong selling pressure, a doji appearance at support could indicate the bulls are getting ready to go long. The most important thing to remember when trading candlestick signals is to look at the context. A doji in the middle of a trading range means absolutely nothing and you should never trade it. A doji at support or resistance, however, is a completely different story. Now let's get into the interesting part. A doji has appeared at resistance. Remember, doji is a neutral signal, so don't jump in the market straight away. Instead, let the market come to you. Wait for a close below the doji's low and only then open your short positions. When placing your stops, you have to answer one question. What is the price that tells me I was wrong? So in this case, a candle close above the doji's high would invalidate the reversal signal, so I would place my stop a couple of pips above the doji's high. A Dragonfly Doji is formed when the session's open and closing prices are at or near the session high. It is a bullish reversal signal, so we will only look for it in a downtrend. Bears were in the charge at the start of the session. They pushed the price lower, but then bulls rejected this lower level and were able to drive the price up to its open, where it also closed. A Gravestone Doji is the exact opposite of Dragonfly Doji. It is a bearish reversal pattern, and we will only look for it in an uptrend. Bulls were in control. They pushed the price up, but this new high was rejected by bears who managed to push the price back down to its open price. The Long Leg Doji is a candle that had the same open and closing price, but have very long shadows on both sides. This candle signal shows complete indecision between the bulls and bears and is not advisable to trade on its own. I know I said it once already, but this is very important. Candlestick signals are valuable only when looked at in the context. A doji in the middle of a range is a no-go. A doji at support or resistance, however, is something to be looked at. Don't miss our next week's video about Maru Bazoo, and subscribe to our channel. And click on the link below to get simple Forex trading tips in your inbox every week.